Good afternoon and welcome. It is Thursday afternoon, and my name is Sally Munro, and thank you for joining us again today. And it's Thursday, and of course, for many, many weeks we have been blessed having Leonardo, DSA from the Scotiabank, join us. Thursday is the day that he brings us up to speed in what's going on in the investment world and encouraging us to continue to move forward. These weeks seem to be just dissolving, and every day is, of course, I try to embrace it. It's a gift because it's always changing. So here we are Thursday, and once you wake up every morning, you don't know where you're going to be, and it's been an interesting morning. Let's say that, right? All of a sudden things are happening and things may be falling apart, and we're trying to keep them together, but I am happy that Leo is here today. So please join me in welcoming Leonardo. Thank you for being here. I'm looking forward to some inspiration today, okay? I don't check the markets, but that's why you're here. So thanks for joining me. It has been this situation every day has not been without its challenges for everyone, okay? And there are moments that people are feeling in Alberta, maybe a little isolated from a part of the country, but please give us at least a glimmer of light. Tell us there's light.
I'll give you a glimmer of light. How about that?
Thank you.
So we the reason why I laugh is because I had more glimmers of light yesterday in the short term, but look, good news. Netflix, Microsoft, and Apple are still attracting capital. Those are the big movers of some of the big movers of the S&P 500. The S&P 500 closed a little bit lower yesterday. On the day before, Tuesday, it closed strongly. So there's nothing negative to say about there. There's a little bit of a two-step forwards, one step back. Housing starts in the U.S. rose 4.3%, and that's just slightly more confidence than the previous month. So that might be interesting to you, Sally.
It is actually.
Yeah. And there's building permits rose to 14.4% in the U.S. The reason why that's marked in some of the correspondence that I received for the daily market summary is that the I'm going to call it the consumption of homes in the U.S. drives a lot of market variables. So it tends to show, again, the U.S. stock market being the giant that it is in the world, it shows the health in some regards, or there's a connection of GDP to the stock market. It's not an absolute, but there's a connection. So that's why I receive it in my daily correspondence. Is it helps us think about holdings such as Home Depot or something like that, where the demand for goods, for building, construction, energy, and everything that's related to that would go up or down. So it's just one of those other variables that we keep an eye on. It's not an absolute, just a variable that we keep an eye on to see how things are doing. Now,
that's encouraging.
It is encouraging. Now, what's also encouraging is what I had mentioned before, that what this is going to look like for the X amount of time that we live in the States is that we're going to see variability in our, not only in our outlook, but I was relating it to the market. So 2 steps forward, 1 step back, maybe 2 back one day, then 3 forward the next. And that's not a surprise. What's happened in the markets last week is that some of the old ghosts started to creep back. So we see risks of renewed wave of infections in the U.S. Case loads are reaccelerating in Arizona, Florida, California, and Texas. Yeah. Houston is starting to talk about imposing stay-at-home orders, and And there's also a few uncomfortable political threads in the U.S. as well. So a few of these things have probably have affected the market and have created the psychology that maybe things aren't back to normal. And let's face it, they're not. But let's move forward. And moving forward sometimes takes navigating a rocky course. Um, the positive as an investor is that um, uncertainty is a known variable in investing.
Mm-hmm.
So when I advise my clients, the primary conversation is what is the goal of your investment and what are we trying to accomplish? And then within that goal, we find out, or I provide the steps needed to diversify the investment holding to achieve those goals. And diversification allows for maximizing the odds of achieving those goals, with the idea of not putting all of one's eggs in one basket. So my advice in these times is um, is that diversification is key, especially in this times. And I have actually a great slide to show you that I prepared today,
Okay.
that allows to show this. Um, so what I'll show is actually, if you don't mind, I'll show it right now.
Please do. Yeah, go ahead.
Um, can you see my screen? Can you please?
See?
Yeah.
Hold on. Mm-hmm. No. Hang on 1 second. Okay, share screen. Location. Hold on. Is that the screen you want me to see? No. Nope.
One that says investment growth?
Nope. Hang on 1 second. These are always interesting things. Mm-mm. Sorry. I think on your end, right, you can... Oh, wait. Do that again. Sorry, I was looking in the wrong place. My apologies.
Okay.
Yes, please. Thank you, Leo. There it is. There.
Okay.
Ta-da! Oh, yay. Yes, I can see this. Thank you, Leo.
You're welcome. Thank you for allowing me to share this.
Yeah.
I prepared this just before our chat today because I was evaluating a portfolio, and the portfolio I was evaluating is this blue one that you see me pointing towards, and I think you can see me pointing towards it.
Yeah.
And this speaks about diversification in different assets and focusing on a goal. So in this example, actually, this portfolio had performed quite strongly before last year. And the question becomes is that, this is a portfolio where this customer was holding a mix of 5 stocks. I'm not going to get into the stocks because, but they're popular stocks that people might hold. Some are local speculatory stocks, some are not, but they held 5 and for a round figure of about $500,000. And actually, a lot of this stuff was making them good money, except since last year, and particularly with this market correction, the stats don't look well. So their $500,000 went from being $500,000 to 382. So this is where the concern comes in. And now I compared it with one of the portfolios that I tend to use for a retirement growth customer. And taking a look at comparing both of what May of 2019 to May of 2020, what the performance might have been, even with the market correction. the diversified solution that holds a mix of stocks performed a lot better within compared to that non-diversified stock holding. In fact, the $500,000 from last year, even through the market correction, is actually valued at 597 now. So that return, that 19.48 return, is incredible. It's very, very high.
Very.
Yet, what this goes to show is the power of diversification compared to a condensed portfolio of companies that actually were doing well. But the issue here is that if you spread your assets, if you spread your assets as much as possible, and it's managed by a team of professionals, then in this case, especially with the downside, the it really does save the capital and help make some money.
So we spoke last week about diversification in the global market. So this particular dynamic global yield,
Yeah.
Not to sound, I mean, I'm a novice. So is that a continuation of what our discussion was? This particular portfolio was a mix of global investments?
Yeah, and keeping in mind that when distributors such as a Scotiabank or any kind of firm that you might be dealing with, or the firm that I work with, which is Scotiabank, it's called Scotia Securities Inc. What I'm trying to say is when something's labeled as global, it doesn't mean that necessarily that it's all over the world. It
Right.
just means that it has a marked global asset class holding,
Okay.
or that asset class holding of is allowable by the mandate. So the mandate would allow the investment professionals, very qualified investment professionals that are managing this solution. It would allow them to participate in the global market by up to a prescribed or allowable rate by the firm that's issuing that investment. So what this means, to answer your question very very much more accurately, is this holding allows the team of professionals to invest up to a certain amount in Canada, up to a certain amount in the US, and up to a certain amount globally. And they have minimums prescribed, but it allows them to participate essentially not only nationally or in North America, but also throughout the world. And that allows for really grabbing onto opportunities that might arise.
Well, this chart is a prime example where diversification in times of a pandemic or what we've gone through, right? It's, even though it blipped, and you can see where it did its little dip, right? But took off again. That's fantastic. A 19.48% yield. That's annualized return. That's pretty awesome, Leo.
I agree as well. It's a pretty awesome return.
That's incredible. Incredible.
Yeah.
Oh,
so
diversification is key then.
Yeah, and imagine if you would have been, if somebody would have been the investor that bought when in the midst of all this. If somebody would have bought in the midst of all this, well, their average cost per unit or on their investment as a whole is a lot lower than it would have been, a few months back anyway. And the potential for returns is evidenced by the increase in price. Yeah.
Remarkable. Probably the best time to have been, is right in the middle of it. There's an old saying, and I don't know if you've heard it or if you're hearing it again, where it says, you invest when people aren't, and you sell when they're all investing. So right?
That's a popular one. Yeah.
So right. During the pandemic, right, when everybody was frightened, if you were sitting on cash and investments, it might have been the time to go, okay, listen, I need help, right? Yes, yeah. I need help. Right. So Yeah, I keep saying that people need to surround themselves with proven strategies moving forward and in solid things. There's, I don't know, I've always said, hard work equals great luck, and there's no get rich quick scheme. Hmm, there
I
isn't.
agree.
But there is slow and steady wins the race, yes?
That's right. And just to comment on slow and steady, I brought a different chart. I know you
Yeah,
were focusing on the 1 hour millionaire.
yeah, yeah. Sorry, I really kind of like that because it would seem that, even the younger investors, I'm talking, to people that are in their mid 20s and 30s, everything has to be like it's all so fast. So I'm going, okay, it's a 1 hour thing. Take 1 hour and yeah, let's get this job going, right? Yeah, sorry, go ahead.
Yeah, so I was looking at just still talking about that solution, just so we're comparing apples to apples, and I
Right.
was figuring out, well, how can we push, how does sitting on cash versus sitting on a diversified global growth investment, what does that look like on a 10-year spectrum?
Right.
So
Yeah.
in this example, we're still talking about $500,000 just because
Hmm.
it's comparable to the last one. But somebody would have started with $500,000 in 2014. They'd be at just under $1 million today at $9,991
In
today.
6 years.
In Yeah, well, 2014 to
Yeah,
20,
2020.
yeah, that's right.
That's crazy.
Now, what now to accomplish this, we have to do two things as investors. Is as my job is to ensure that this is just an example. So this is assuming that this investment strategy is well suited for for the individual undertaking it.
Hmm.
Um, but the other trick to 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 this approach is when we have these changes in the markets, and we have to stay the course, because if this was the investment strategy that was set forth, and we haven't changes in the markets like we had in 2018 or we recently had, the trick would be to stay the course. Now, this is assuming, I mean, in this example, it is an individual that has a, a pool of money for funding their retirement. So this is based on their risk and their goals. This is the right solution to be in. But yeah.
The last 5, 6 years went like that. Okay, so and in light of, I mean, if you look back to 2014 and what has happened in our economy in Alberta, we've been um, in a recession for the last 4 or 5 years. So,
Yeah, there's been Alberta has definitely felt a pinch in the last 4 or 5 years. And that's a good comment, Sally, is I speak to a lot of my customers, and we all live here and we all work here.
right.
But but that doesn't mean that our money can't work for us in different parts of the world, right? Um, so I leave that to the fund managers to decide where they're going to put that money to work. Because even if we have the sentiment that, hey, we could be undergoing through more growth here, or my property value is not increasing fast enough, or the job market's tough, or things aren't what they used to be. Well, if one as a customer or as an investor sitting and saying, well, I want I want this money that I have, earmarked for retirement or for down the long term for growth. Well, it can go to other parts of the world, all managed by the certain firm, but it can go to other parts of the world to extract that growth. You no longer have to move across a continent to enjoy the growth that a certain market is undergoing. So
Wow.
that's an example of diversification in itself.
When I look back and I think about the number of clients, and you're right, you live and work here, and the real estate portfolios haven't grown. Um, you have to wonder, should a person really, really rethink this plan? Wow. I would, based on what you're showing me, this strategy works. And it's actually a great way. Often in conversation, I hear people go, well, I should have moved my money and I should have bought, real estate in Vancouver. But instead of, if you're earning your income and money from here, this is a solution where you can actually capitalize on markets, things that are growing everywhere.
Yeah.
When your own market is sort of stagnant
Yeah.
and stable. But then, as you say, we have roots here. This is our life. It's not that easy to pack up and move and start over. I think, yeah, this is amazing. And everyone will say and realize. I mean, you look backwards for the past 5 or 6 years in Alberta, where oil has gone, jobs, the whole thing. It's really a tragedy, actually, when you think about it. And moving forward, where is the growth? I mean, you sit there and you have discussions. That's why it was encouraging, as you talked about, right, the housing growth. Naturally, there's growth that way because, people grow, our families age, they need certain things, but it's not growing exponentially or as quickly as other global markets because we lack population. I like, people, that too, right? So,
Well, people are a big driver. Yeah.
yeah, population is a huge driver. Leo, this was really, really quite profound. Thank you for sharing. The charts are, it blows you away. Trust me. And that's 6 years because we grew up with the adage, right? If invested and left alone and compounded the old way, money, that's providing a yield of about 10%, and I'm seeing an annual 12.26%. Yes, money does double every 7 years, roughly. Look at this. Yes.
Yeah, that's right.
Wow. Amazing.
This graph is showing that.
Incredible. So we thank you, Leo, right? 21 minutes. This is crazy. And I just encourage people every day to share, to just dedicate 1 hour, okay? 1 hour to become, as you can see, you can become a millionaire in a very short period of time, right? Look at that. That's incredible. Leo, I want to thank you again for being here, and you've been solid for so many weeks. And this has now become a habit. Even though I rush to get here and we may start 5 or 7 minutes, but in my world, I never know what's going to happen, right? Yeah, you're right. An emergency call, a great call, whatever. But we're all managing, and I want to thank you, and I hope that we'll see you next week. And as we move forward, I can think of a couple of people. I mean, it's Thursday, so there were some good things that happened in the real estate side of things for me, and some not so good things because we're having some struggle keeping files together, trying to get buyers and sellers to, find their way, right? It's not easy right now, but we're seeing more movement of people. And of course, with phase 2 opening up, we now are allowed public open houses, right? So with COVID protocols in place, which is fantastic. One family at a time, we're still, hand sanitizing and respectful of the space, but we can go back to having a public open house because that was shut down, period. Right?
Yeah.
And then I ask people to be mindful of the instructions of sellers who are living in their homes. Some people are not interested in that. Some people still have, COVID measures in place. I think we have to just adapt to how to live with COVID-19 because it'll be around for a while. Leo, this is phenomenal. Thank you so much for being here today. And thank you all for watching, right? We know that you're all very busy. The weather is changing. Look at this. And listen, June 19th, that's tomorrow. And isn't that signal the first day of summer? Yay.
That's right.
And then, of course, we have Father's Day weekend. So I always tell everyone they must all celebrate Father's Day, because without a father, we wouldn't be here. We don't have to be a father to celebrate Father's Day. So, Leo, thank you for being here, and please enjoy the weekend. And God bless you and keep you safe. And may you be able to speak to your family.
Thank you.
Distance, okay? Thank you all for watching, and I will be here tomorrow. It's Friday and live, and I look forward to being here just to chat and call, text. We're always here. Surround yourself with people you trust. Thank you, and have a wonderful day. Bye for now.